Ladies and gentlemen, we're back. I'm Roy Levine, professional day trader, to one of the juiciest parts of trading, tools and indicators. If you've ever stared at a chart and wonder how people predict where price might go next, well, a big part of that comes down to using the right tools and indicators. In the next few videos, I'm going to start breaking down the top 5 tools and indicators every beginner should know about. These are tried, tested, and trader-approved tools that will help you spot trends, time entries, manage risks, and stuff along these lines. So grab a notebook and let's jump right into the first one, the Fibonacci Retracement tool. So we got this really nice and clean chart of Binance, also known as BNB USD, and I just want to demonstrate a normal use of probably one of the most popular tools out there, which is the Fibonacci Retracement tool. That is very important, I would say probably the most important tool we have in our disposal here, because this will give you a predictive value. It will basically tell you what are the support and resistance key levels you want to make note of, because when price action starts to approach one of these key levels, it tends to have some reaction to it. A rejection, for example, right? It might get a rejection, and once it actually starts to break through, it will gain momentum on the breakout. So this is basically kind of a support and resistance system in a way. Let's see how that works. First of all, we see a move, right? From bottom to top. Easy to see, right in the center of the screen, a move from bottom to top. And let's say we're staring at that move as it happens, and price action at some point starts to turn around and generate a technical correction. That's where you want to step in with the Fibonacci Retracement tool. Let's pull it up. You see this icon right here with F, the letter F at the lower right bottom. That's the tool you want to use. We click that one. You can also find it in the tools drop-down menu, by the way. But when we get it for the first time, we get the default, right? So let's do the default. This is the default. This is how it's going to pull up for you guys. What we want to do is delete a few numbers, remove a few numbers. We'll start with a 0. We'll keep the 23.6, that's an important one. 38.2, that's another important one. 50%, that's another important one. And the last one, 61.8. So we want to keep these 4. These are the 4 most famous, most popular Fibonacci ratios there is. I mean, you can go and you can read books about the Fibonacci. The first ratios related to trading are those 4. So basically I delete all the rest of them, and I only keep those 4, and it's going to look like this. And this is how we're going to use Fibonacci retracement. So once you started to identify, it's important to identify a correction underway, right? So when we see a move going straight from down to bottom, and then at some point starts to correct, right? Inside of that correction, we start to apply the Fibonacci retracement because we want to know what's the downside potential of this correction. Whether we want to go short or whether we want to know where to pick it up from, right? And here, I did it backwards. All right, here it is. So you can see that on the way down with that technical correction, price action is having multiple reactions to these levels. It's evident, right? You can see how it goes it spikes the 50%, right? Pull back up above 38.2, then a big drop all the way to the last level, 61.8, and then a big pullback. Notice how price action is closing that monthly bar just above 38.2, just slicing 38.2 and slicing 50% on the way back, and then again, doing that again the following month, slicing that 38.2, right? So at some point it was trading well below, but then it jumped back up and closed that monthly bar positively. Another evidence of how significant this 38.2 was acting back in that at that time. Now this is one measurement, so looking at this and looking how price action is pulling back off of that 38.2 would have been a good trigger to buy at that point. Another interesting measurement you can do is for the second move, right? From top, right? This time we're going to take this partial move from bottom to top. Take a look. This is a technical correction. Didn't go beyond 61.8, right? Went all the way down, challenged 61.8 3 times in a row, and then the pull back up, suggesting there's more of that upside potential, right? Because it made that correction. 61.8, it's the last line of correction by definition. So the fact that it's coming back up now suggests that it has more of that upside potential next, meaning a newer, higher high. A new high. All right, let's take a look at the last option we can have here for measurement, and that's the full move, right? Because we broke it down. I broke down that move into two segments. That was the first one, and then the second one. Now I'm taking it fully, the whole move from bottom to top. Take a look how price action has very lovely reaction here, the 38.2 3 times in a row, and then turning back up to extend that upside trend, but it's facing an obstacle. Guess who? 23.6. So you see how useful and how effective the Fibonacci retracement tool can be to dissect different phases of market movement. That's about that for this one. And that's a wrap for today's video. This was the first one out of like I said, the top 5 tools and indicators every beginner should have in their toolkit. So that's the first video. We're going to continue until we cover all those top 5 indicators. Now remember, indicators aren't magic signals. They're tools to help you make smarter, more informed decisions. That's all there is. Now, if you find this helpful, hit that like button, drop a comment, and tell me which indicator you're most excited to test out on your charts. And of course, subscribe if you haven't yet already, because our next videos we're going to be super interesting. We're going to continue to breaking down those tools and indicators list, and then we'll even show you how to build a full strategy, a full game plan, step by step, using these tools and indicators. All right, it's going to be a game changer for your trading routine. I'll see you there. Take care.